Good morning, everyone, and a warm welcome to the Industrial Technology Conference. I am very pleased to open this session with Kontron, a leading provider of IoT solutions, embedded computing systems, and industrial software. And it's my pleasure to welcome Mr. Clemens Bilek, CFO of Kontron. He will guide us through the presentation and share deeper insights into the company. Before we begin, a quick housekeeping note: the conference is being recorded and all participants are in a listen-only mode. And after the presentation, we will move on to the Q&A session. Please submit your questions via the chat box at any time. My team at MBB Research follows Kontron closely, and I will share a link to our latest research in the chat box. And with that, Mr. Bilek, thank you for joining us, and the stage is all yours.
Hello and a warm welcome from my side. I want to give you a brief guidance through the most recent Kontron results and give you an overview of Kontron for those of you who don't know Kontron that well. Let me start with a brief introduction. What does Kontron actually do? Well, we are the leader of smart industrial IoT solutions. We're focused on large and growing B2B IoT market solutions with a very broad customer base, around 4,500 customers with a very diversified customer base. None of our customers actually account for more than 5% of our revenue. So if you take the top 10 customers, you don't have more than actually 15% of the total revenues of Kontron. We are a fully integrated technology company, so we provide hardware and software solutions combined, typically involving the connectivity to the internet. That's why we're called the IoT solutions provider. We have several solutions for various industries, from trains to actually cars, airplanes, and robots in industrial factories. They used to be connected via 3G. They still are connected in 3G for trains, for example, because they have a relatively old technology, but we have switched for most other industries already to 5G and even preliminary 6G solutions, which will provide with the relevant cybersecurity solutions. Some of you may be aware that from 2027 onwards, most critical infrastructure players will be required to have the Cyber Resilient Act compatibility for their solutions. So if they are connected to the internet, if they have some connectivity topics, they need to make sure that they are connected to the internet in a Cyber Resilient Act compatible way. And Kontron is providing all of its software, and our operating system is Kontron OS, connected to up to 1 million devices in so-called Kontron grids. And we provide them certified in a Cyber Resilient Act compatible way. So companies which use Kontron OS and Kontron Grid can be sure that the solutions they provide are compatible with the relevant regulation. We have released Q1 beginning of May. Just to give you a brief glimpse of what the most recent results were looking like, with a strong growth in transportation and defense. Those two divisions which are actually driving growth also on the revenue side currently in software solutions. They're also margin-wise significantly higher. So the play of Kontron's margin increase is coming by the increase in transportation, service to the train industry, and defense VPX modules served for our customers in the military sector. Both sectors grew by over 20% in the first quarter and are likely to grow. We expect them to double by 2030. So they are likely to grow by at least the high double-digit range, 18-19% on average until 2030. The backlog increased again. We had a book-to-bill of 113, and we have a record backlog of 2.5 billion currently. Working capital also improved. That was quite a headache in 2024, and it has since then improved almost every single quarter, from around 450 million to below 300 million. We are now at 283 million. So it's a further improvement from the already significantly lowered level of year-end 2025. At the same time, also looking at the lowlights, we started the restructuring of the green tech division, so the solar inverters and the wall charging business, in order to make them more competitive, with savings of 30 million expected on a run rate by the end of the third quarter. So in Q4, you will also see a significant savings potential realized. Those reductions actually will cost 25 million in the course of the first 3 quarters. So we have already expensed 8.5 million in the first quarter. There's still 126 million of cash payment outstanding from the com business transaction we have closed mid last year. This amount is actually was already due, and the Congatec and DBAG pay an interest of 8.5% to Kontron on that 126 million. So it's quite attractive. If they don't pay the full amount by end of September this year, they will have to pay another 7 million as a kind of penalty payment on top of the actual interest rate. In theory, they have until 2028 to pay the full amount, but they have several steps of penalty payments on top of the interest if they don't pay by end of September of this year. And last but not least, you may be aware that Anocon has taken a step forward. They were kind of exploiting the share price development, which was quite weak beginning of the year. Following the release of our full year numbers in March, in the wake of the Iran war, which also played a role, and they have taken this situation and announced the mandatory tender offer, which will be released. They have mid-May made sure that they have crossed the 30% threshold and thereby triggered the mandatory tender offer, which will be executed at 23.5 euros per share. Yeah, very briefly looking at the latest KPIs. So revenues pretty much flat on a like-for-like basis. The order entry is quite good. So we have a book-to-bill of 113, implying a growth of 13% in the order backlog. We expect more than 1.6 billion of revenues this year, and we have a backlog now of 2.5 billion. The gross profit was burdened because obviously we have sold the com business in the first half of last year, and the gross profit was weighted by several customers jumping ship, as well as the supply chain crisis burdening Kontron in the first quarter. You see that gross profit was down significantly by 10%. EBITDA was up though at 46 on a like-for-like basis, taking the one-offs for the green tech restructuring into account. And the net result after the minorities was 20 million euros. also slightly up compared to last year if we take the one-off charges into account. Operating cash flow, not that impressive, at 3 million on an adjusted basis, as we have lowered factoring, and minus 9 million if we just take the bottom line of the operating cash flow without taking the lowered factoring into account. Group balance sheet. Briefly, the working capital has improved. The total net debt has temporarily increased by 50 million. If you take the 126 million we expect from the Congatec sale and deduct it, we are definitely below the range of 0.5% of EBITDA, which is the target range. Target range is from 0.5 to 1 times EBITDA as a total net debt. And the equity ratio has improved again from 41.8% to 42.5%. Well, I've mentioned the additional disclosures already briefly. We had reported third-party revenues, but we deconsolidated the COM business at the end of H1 last year. So you have to take those 19 million as well into account, and the sold units in Bulgaria and Hungary. That brings you to an organic growth rate of 1.7%. We have significant R&D, as always, more than 10%. The larger part of those R&D expenses is already for software solutions, especially for transportation and defense. We had delinquent backlog of almost 33 million, which means that if that was backlog which was due to be shipped in Q1, but we were unable to ship because some components were missing due to the chip crisis at the moment. And we also give a EBITDA growth breakdown, giving you reported EBITDA, and on top, of course, there are the restructuring program, one-off charges for the cash saving program of 8.5 million, bringing the EBITDA to a total adjusted EBITDA of 46 million. Obviously, some of you might say, well, I don't believe these adjustments, or I don't take these adjustments into account. And obviously, that was also reflected in the share price and caused Ennoconn to start with the current offer. The major KPIs, well, mentioned most of them already. The FTE number is going down in the course of the restructuring significantly already. It's below 7,000 employees currently, and we're getting closer to 6,200 at year end. That's my personal expectation. We also try to give you a clearer, more transparent view on the actual backlog. So you see that we have total backlog of 2.5 billion, but that is obviously not only for 2026. It's the total backlog currently in our books of binding contracts. Of that 2.5 billion, 1.1 almost billion is the open backlog for 2026. We had reported revenues of 364 million in the first quarter. So a total of 1.4 billion, that's the total coverage for 2026 already. So 86% of our forecasted revenues of this year is already covered by revenues in Q1 and by the backlog for 2026. There are more design wins and backlogs to be expected in the for transportation, for defense, and also we have currently negotiations in the network access devices, so for the 5G modules for cars. That's the biggest contracts we're currently negotiating. And on top, we're accelerating discussions with Ennoconn and Foxconn. They have around 1 million employees. It's a huge company. They have hundreds of factories in China, but also factories in the US. And they are interested in replacing some of their employees, because in China they feel the demographic development, and in the US they see that they can't be competitive unless they have a very high level of automation. And they expect to place robots, humanoid robots, in the factories, and they're developing kind of a Optimus 2 competitor, and they will need the Kontron connectivity modules for that, and that's why Kontron is a strategically important for them, and they're trying to secure their stake and secure a higher level in participation, more than 30%. With this lowball offer, they're unlikely to get more than 50% in Kontron, but they at least want to make sure that they have the board representation they currently have, and they want to make sure they have the AGM representation they currently have. Very briefly, smart IoT. You see that the orders have developed quite favorably in the first quarter. This segment, Smart IoT, is delivering the network access devices, just to name one, and will deliver the connectivity modules to Foxconn and Ennoconn in the future. Then obviously we have the fast-growing software and solutions segment with an even higher order entry that's driven by transportation and defense. It was not impressive EBITDA in Q1, probably also weighing on the result. Well, that is kind of shifting and fluctuating from quarter to quarter, but all in all, we expect to have an increased profitability and an increased EBITDA, a significantly increased EBITDA on a yearly basis for the total year 2026. And you will see that already software solutions represents more than 50% of group profits, and this will increase to 75% by 2030. What we need to solve in the meantime is the green tech division, which was weighing on the result in 2025, and it was weighing on the result in the first quarter of this year. And we don't expect a significant upwards movement. I'd rather expect that business area, green tech, to stay on the same level, with a significant competition from China, in particular on the solar inverter side, and also with wall chargers. But we have a contract with Volkswagen, and we might win a contract with another German OEM in the near future. We're in close negotiations there. So we'll see the outcome, but we're shifting part of productions to Bulgaria because we can produce much more competitive from Bulgaria and not from Germany, unfortunately. So with Bulgaria, where engineers are getting paid 20,000 euro per year, while in Germany you have to calculate with something more than 70,000 euros. So it's almost impossible to compete from Germany. But from Bulgaria, we are convinced we can even compete with some Chinese players, because they have, on top of the production costs, also to take logistics and transportation tariffs into the EU into account. That gives you a glimpse of the new segmentation. We have Smart IoT and Software Solutions, just two segments. We've integrated North America and Asia into Smart IoT because that used to be a third segment, but a lot of investors said it's confusing because you have three segments in a geographic setting, Europe and global, and then Software Solutions. So we have two segments only, Smart IoT, Software Solutions. With Software Solutions, getting equal in size, actually. Now, for target size 1.5 billion by 2030 compared to 1.7 billion for 2030 smart IoT, and green tech getting allocated to different divisions in order to make them profitable and to get more synergies out of that. So they will be integrated in industrial ODM and the software part in cyber solutions. Talking about cyber solutions, it did not grow that much over the last year and the last quarter, even though we have launched several new products. Why didn't it grow that much? Because Kontron OS as our proprietary software system and our proprietary operating system is delivered integrated into our hardware products, and we don't charge separately for that. So in the first phase, so in the initiation period, 1 to 3 years, when the hardware is delivered, the customer gets our software for free. But after those initiation period of 1 to 3 years, the customer has several choices. Customer can either continue using the hardware and software for free because he has already paid for the package. He can buy new hardware and software, or thirdly, he can decide to get upgrades and security patches. And if you're in critical infrastructure, we assume it's quite hard not to take security patches and software upgrades, because you would have to explain to your stakeholders why you don't take precautionary measures against cyber attacks. And on top of that, the Cyber Resilience Act requires you to have specific focus on security updates from 2027 onwards. So we are convinced that after another 1 to 2 years, you will start to see the increase in software revenues on an isolated basis as well. Defense, a hot topic these days. We're providing VPX modules, so that's our main product family for defense, which is connectivity modules, rugged computing modules, which are shock resistant, temperature resistant, are providing data connectivity between armored vehicles and the central command station in an encrypted way. While in the past, from a Leo 2 tank, for example, they used walkie-talkies, they are using VPX modules these days. And we're providing those VPX modules and are one of the few European providers of those VPX modules. And this obviously is rising significantly, not only with new armored vehicles, but also with retrofitting armored vehicles which have been produced in the past. I mentioned the restructuring, transportation. Yeah, we missed the most important part because transportation is really the pearl of our portfolio. We are growing there because the train segment is expanding in Europe with a market share of over 60%. We expect total revenues of over almost 300 million this year already. And this is growing at almost 20% every year. As there's little time left, we've mentioned the restructuring program already and the green tech strategy. I think I want to give you a chance to ask some questions. So I think we have flipped through the program briefly, and the total revenue forecast is in the range of 2025. Maybe a bit disappointing, but at the same time, we have the challenges from the supply chain crisis, and also we see that Volkswagen has not ordered as many wall chargers as we anticipated, but the EBITDA is going to be in the same range like last year. Now I'm happy to answer a few questions if you want.
Mr. Bilek, thanks a lot for the presentation, and we've received some questions already. So I start with the first one, and we try to cover as many as we can. First question: how do you intend to monetize Kontron OS, and how far along are you currently?
We have currently around 4 million Kontron OS devices outstanding. We will deliver starting from this year to Congatec. So Congatec will also have the Kontron OS on their devices from 2026 onwards, and we will probably try to tap also to Foxconn and Enercon. And after 1 to 3 years, the customers have a choice to take in software as a service model to pay €1 per device per month, providing, I mean, with a target of 28 million devices equipped with Kontron OS, that provides us with a revenue potential of over 300 million.
Perfect. Thank you. We've got a few questions regarding Enercon. We'll start with the first one. With Enercon reaching a share of in Kontron of 30, above 30, let's say 40%, will that have consequences in tendering for US or European defense contracts?
No, it has no consequence. It will start to have consequences. First of all, I mean, Taiwan is not a Chinese player, so they are regarded as a friendly shareholder. At the same time, yes, Taiwan is kind of, with insecurity over the development with China, but below 50%, even if it was a Chinese player, it would not have consequences.
Okay. By when must Enercon make a takeover offer for Kontron at 2350? What is the deadline? And is approval from government authorities regarding antitrust law, foreign trade law, etc. expected? And what happens if approval is not granted?
Yeah. The tender offer is expected to be launched by end of June. They have already submitted their documentation, as far as we know. So it's going to be to start swiftly and probably with a acceptance period of 4 weeks. So they want to be through quickly. They don't need antitrust approval unless they get over 50% in the shares, which I would not expect from a current point of view. And they would also need only the FDI approval over 50%, and over 40% they would need FDI approval in Germany. FDI, that could happen, that they get more than 40%. In that case, they would have just an FDI approval in Germany, which I would be surprised if that doesn't go through. But if there's probably a long stop date for 6 months. So if they don't get it within 6 months, the offer would fall apart.
Perfect. Where do you see currently the main engineering bottlenecks in scaling defense and transportation rail projects?
Well, we are making sure that they have the engineering resources. We've also redirected engineering resources from green tech to transportation and defense. So the bottleneck is not on the engineering side. We see significant. I mean, we had growth of 28% in transportation in Q1 only. So that's really, it was growing a lot, and I still expect growth in Q2 in both in both divisions. So I think they are developing quite favorably. On top, please don't forget that they have an EBITDA margin of 20% plus expected by year end 2026.
Perfect. Maybe just the last quick question: is Hensoldt or Saab one of your customers in the defense business?
Both. Short answer, both.
Short answer. Perfect. Unfortunately, we are running out of time. Thank you all for the questions, and a special thank you, Mr. Bilek, for your time and sharing your insights. All participants will shortly receive a brief email, and we would appreciate if you could share your feedback with us and the company. And thank you once again for joining us today. Defense will also be a topic in the next presentation, Heidelberger Druckmaschinen, and we have provided a link in the chat box already, so feel free to join us in the next presentation. And I just say goodbye and take care.
Goodbye. Take care.